You've probably seen headlines and videos claiming that 2026 is the last chance to get rich. It's a bold statement, one that sparks both curiosity and skepticism. But the truth is, the focus shouldn't be on 2026. In this video, I'm going to show you 3 practical actions you need to take today to prepare for the next major economic cycle, regardless of when it happens. For over a decade, my job has been to translate complex scenarios into practical insights, helping people like you navigate the world of investing with greater confidence. If you're looking for a serious no-hype analysis, let's get straight to the point. So, why all the buzz around 2026? The answer lies in several major cycles converging. First, the interest rate cycle. Historically, after periods of high rates used to control inflation, like the one we're in now, comes a phase of rate cuts to stimulate growth. Many economists believe this shift could strengthen between 2025 and 2026, making money cheaper and boosting investments in stocks, technology, and other risk assets. Second, the cryptocurrency cycle. The Bitcoin halving, a key event, historically sparks a new bull market about 12 to 18 months later. The last halving happened in 2024, meaning a potential peak could occur right around 2025 or 2026. Third, the innovation cycle. We're living through an AI revolution that's driving asset growth at a pace many compare to past technological turning points in history. Of course, there are risks. Geopolitical crises or unexpected recessions can change everything. The truth probably lies somewhere between extreme optimism and deep pessimism. Imagine the economy like the seasons. We've just come out of a financial winter. Now we're entering spring, where the seeds of growth begin to sprout. In this analogy, 2026 could be the start of summer. You can't force summer to arrive, but you can prepare the soil and plant the right seeds during spring. So, what's the smartest strategy to build wealth and take advantage of this new cycle? The answer isn't in a single bet, but in a structured method. The most effective approach isn't to predict the future, it's to prepare for it. The main strategy is to build a diversified portfolio before the market euphoria begins. That means gradually allocating capital into assets with strong potential. For example, instead of guessing which company will be the next big winner, you could invest in an ETF that tracks indexes like the S&P 500 or NASDAQ 100. That way, you gain exposure to the growth of the world's largest companies simply and diversely. Investing a fixed amount each month, known as dollar cost averaging, helps remove emotion and reduces the risk of buying at market peaks. A younger investor might take on a bit more risk in high-growth sectors, while a conservative one may prefer stability. The key is having a plan. But understand the limits. There's no guaranteed formula for profits. Unexpected events can shift the landscape. That's why this approach isn't for those without an emergency fund or who can't tolerate short-term volatility. Patience is non-negotiable. Now that you have the strategy, what's the biggest danger? The thing that could sabotage your entire plan. Most of the time, your biggest enemy is yourself. The main mental trap in this next cycle will be FOMO, the fear of missing out. When headlines start celebrating massive gains and your friends brag about profits, the temptation to abandon your plan will be huge. Remember, when an opportunity becomes news, the biggest profits have likely already happened. Discipline will be your greatest asset. Another danger is scams. In times of euphoria, experts and fake platforms promising quick, outrageous returns multiply. Be skeptical of anything that seems too good to be true. Do your own research and invest only through regulated brokers. And never put all your money into one asset, even if you strongly believe in it. Diversification is your best risk management tool. The right mindset isn't that of a gambler, it's that of an entrepreneur allocating capital wisely. Now, let's talk about practical steps you can start today. First, organize your finances now. Build a budget, pay off expensive debts, and create an emergency fund. Investing without that base is like building a house without a foundation. Second, open an account with a trusted brokerage. Start small, just to get comfortable with the process. Invest in something simple, like an index fund or a government bond. Third, set clear financial goals. Instead of saying get rich, define something measurable, like save $50,000 for a home down payment in 5 years. Clear goals keep you focused. And finally, keep learning. Read books, follow credible sources, and stay curious. Continuous learning is the best investment you can ever make. Throughout this video, we've seen that there's no magical date. There are cycles that create favorable conditions, but success depends on strategy and discipline, not luck. Wealth building is a marathon, not a sprint. Expect volatility. The results of a well-executed plan may take years to appear. The market doesn't give you a last chance. It gives you a next chance every day. The real risk isn't missing the 2026 wave. It's standing on the shore, waiting for a perfect date that never comes. The real opportunity is today. It's your decision to get organized, learn, and make your first investment, no matter how small. Now I want to hear from you. What's the biggest lie you've ever been told about getting rich quick? Let's expose it together. Remember, the control of your financial future is in your hands, not in a prediction. Your power lies in the consistency of your actions from this moment on. Build your knowledge, stay disciplined, and be patient because this is the only formula that stands the test of time.